Well, what we're seeing here is we're definitely seeing a bit of profit taking. We're seeing disappointment with both the pandemic response along with the stimulus response, or the lack thereof, both. So investors they're taking a little bit of profit taking, which is normal and it's stable and it's healthy to do so at this time. But at the same time, you should be looking for bargains, in my opinion. There are some bargains to be had out there, and we can talk a little bit more about that later. The fact that we have our final earnings seasons coming into play are making investors skittish that there isn't a heck of a lot of confidence out there. So we have to keep that in mind when we're going and doing our strategic buying. There were signs that were pointing within the summer that an agreement wasn't going to get done. However, you know what? You never know with these things. In the public's best interest, both sides could come together, as they did with keeping the government running, and they had an agreement doing that. So we don't know, but at this point, I think Goldman made the right move, lowering the growth estimates for the rest of the year. It is something that we see as well. We also think that in terms of any growth outlook for the rest of the year, should be really a little bit skittish at this point. You should really pull back on any reasonable expectations. And we are going to have surprises. Some companies are going to come out with good earnings and and will continue to see growth in certain sectors, albeit it may not be the ones that you thought of before. Whoever the president is going to be is going to enjoy the fact that we are closer to a vaccine, the fact that certain companies are going to continue making money, certain sectors are going to continue showing record profits. So that's another thing. We're also starting to see other sectors wake up and start to make money there. We are seeing, the only thing against that I see right now are the unemployment numbers, which came out showing there's still a record high. There's still 30 million people out of work right now here in the United States. And that's not the total number, but it could be a sticking point as to further growth in Q1, Q2 of 2021. So we have to be cognizant of that. We have to be realistic with our determinations. But I agree. I think that the markets will edge up higher Q1 2021, along with the prospects of growth in this country. And by Q2, we should start to see more of an upward trend along the lines of what we had seen in previous years. Once we see the shakeout of the tech sector, who's next? Is it going to be consumer staples? Is it going to be other types of technology that are going to take the lead? I don't think so at this point, not just yet, but there are other sectors just lying in wait to come out and go on the upside to create an interesting market. Remember, the S&P, the top performing companies have only been 15 companies out of 500. All right, so that's not a lot of companies participating. That's probably one of the most narrow-based rallies I've seen in years, and I'm doing this 25 years. So you're getting a lot of mixed messages right now. But the thing that I am certain is that we are going to see, especially the closer we get to that vaccine and that it starts getting distributed to the public, we are definitely going to start seeing the markets edging up. Once the word is out that that vaccine is viable and going to be used on the general population, I could see the market exploding for whenever just a wind gets out there. Traditionally, what I've seen in my career, when companies stock split, they get, the price goes under pressure for quite some time, and then after that it goes up. So I see the same thing happening with Apple. Tesla was under pressure before. It's up substantially today. So we're already seeing that going up. And there are many industries are many other companies related to both these companies that the minute they start going up, by default, those other companies start going up as well. So it could be a little bit more broad-based in terms of the upside for both these companies. It's let's stay tuned and let's see. And this is not the time to say to yourself to sit on the sidelines, because no game was ever won by sitting on the sidelines. So this is the time to look for the companies that you believe are going to be market dominators or market leaders in their sectors, and make strategic bets on those, to make moves that I believe that are going to benefit you long term. You know, if you're a trader, you have a different focus, but as investors, we think, you know, we're thinking 5 years out. You know, we're not thinking of the moment, and we're not going to get ruined as investors if the market trends down, you know, 5 to 10%. Nobody likes, you know, more to your comment, nobody likes to lose money. Nobody wants to lose money. But risk is the name of the game when it comes to the stock market. No one goes into stocks knowing that they want to lose money. They go into it knowing that there is plenty of opportunity for the upside to make money, and that's the reason you get in. If you go in with this fear and the like, you're really not you're doing yourself a disservice, and you really should be thinking, what's my potential upside with my time frame, and how am I going to get there? So that's the way that I'm looking